So JB, you here? Guys, what we want to do today? Hey, you're the new person. You need to tell us what you want to do.
Today we are going to ask people what do they need to start?
Where do I need to start? We don't have Ryan. What is Ryan?
Right, but we have Asaya here. Asaya can go and tell you what is he lacking that he's not starting buying 5 doors and up.
I said this is a very friendly group. We need to talk here. Don't talk, you don't get.
I don't have no capital. I don't have no money to start buying property.
Okay.
That's why.
I tell Aisha, that's not a problem. Yes, it's a situation, but I think you're doing the right thing. Before capital, you need to know what you're going to do. Well, what experience do you have? What do you know?
I just have experience wholesaling. I wholesaled a couple of homes, but it wasn't consistent.
Right. Yeah. Wholesaling is very good. It's very tough. A lot of work, but at least it's very good because you yourself updated with what is going on in the market, the prices. What areas were you wholesaling?
I felt like it was so much competition in Miami. I started wholesaling in Daytona Beach, so 4 hours from Miami.
No, very familiar with Daytona Beach. I have family in Ormond Beach and around there.
Okay, so yeah, you're very familiar if you know about Ormond.
I just don't do business there. I do vacation. But yes, prices are different. Very good houses.
It's way less expensive than Miami. Every time I try to wholesale in Miami, I would try to skip trace the home, and I would get nothing but LLCs, and I wasn't able to get in contact with the owner of the LLCs. It was just very difficult. I find it much more easier to wholesale in Daytona because I stayed there for a while.
Nice. No, that's good. And now you're thinking also to learn the multifamily world.
Yes, because I met a guy in Daytona, and we did a deal. That was my second deal. We did a multifamily deal. It's Bethune Beach. It was on the beach side. I mean, he made a lot of money off that one. What he did actually, and that's what got me interested in multifamily.
No, that's very good. It's a very good market. It just require a bit. You require a bit. You need to know what you're doing. Then when the numbers, the units move, there's more units. There are many things to do to study. But it's at the end, guys. This is math. So one part is all math. You need the numbers need to make sense. Then you can keep going and going through the how do I buy better. Meaning if you're going to go value add or if you're going to go middle, meaning or you're going to go already full remodel. There's the three or new, even new construction or construction. But what you will need to look in the group, and I don't know, David, whenever you introduce yourself to, is David Hasiza. But it's very important that we in the squadron group, what we want is to take action. And the situation with the action is that people don't know where to start. So what I always tell you, guys, either you find deals or you find capital. And keep learning so you start buying your own. Keep learning so you can take advantage when you see a good deal. We're going to analyze a deal now. Anybody is welcome to have the calculator. But what really we're looking is for you guys to find your next step and to do make more money. In this world, you make money when you sell a service, when you provide a service. So what we're trying to build in the squadron, okay, I go there, I want to learn. Learning doesn't make you money. Doesn't make money to other people is there. You don't go to the squadron to learn. You go to the squadron to find out what you can do to make money. Or what service can you give to the people that is there so you can make money. I mean, you can, when you go to a squadron, you see this, people that do management, people that do Airbnb, cleaning, even cleaning is something that every building needs cleaning. You need to build up capital in order to do investments. So it's very important that you figure that out before, I mean, keep learning and learning and learning, and then, okay, what you do with what you learn. You will learn much faster if you find capital, because what you do, you join with us with any of our sales, any of our deals, and you promote that deal. By promoting the deal, you're going to understand how to explain the deal, how to analyze the deal, what question they ask you. The more question they ask you, the more you're going to learn. You need to be hands-on. That's why we, 2023, we bought one building. We have not bought another one this year. And we've been a bit slow just because of the market. But more than that, we want the new other guys. We did it with 14, I believe. We need another guys. But guys, the one we got before, most of the group is very passive, which is okay. I mean, investor means I want to make money. You don't need to work to make money. If you can be a passive investor, that's perfect. Let's do it. But let's go and go to the scenes we have. Ryan here today. You're going to conduct the meeting, Mr. Ryan. You're going to be talking, and because I'm better than last week, but I'm still not full. So I shall share the screen of another deal. Ryan, let's do a conversation. Talk to me. Open the mic. Are you there or?
I'm here. I'm still settling in.
But can you help me with the presentation?
A little bit, yeah.
A little bit, full. Okay. So when we look at multifamily, what's the first thing we want to do?
Assess the rent.
Rent. I believe, I mean, there's many ways to go about it, but income is the more important part for us, because you cannot add income most of the time. I mean, that would be beautiful, but you need to know the income of the property, and you cannot create the income of the property. The market tells you the income of the property. That's why we have here an MLS shot, tells you what is the income. These numbers here says 2-1, 2,400, 2-1, 2,400, studio 1,500. You need to know that you can achieve that.
Yeah.
So, guys, ask me a question if you don't have it. I mean, but do you know how you achieve that? How do you know that the rent is right? Does anybody has a question about that?
You check rental comps?
Rental comps. Try to find a good realtor there. That there. Even Zillow is good sometimes. But go, and you really need to check the properties. We already said that we're going to buy this building. So now we went there, we saw the pictures of this building, the rents. I need you to see the pictures. You cannot compare a remodel, no remodel. Two buildings next to each other is not like two houses or three houses. That's why many people that come from the residential world have issues with comps, with multifamilies, because they are so unique, and it doesn't mean nothing that this one next to another one. They are very unique. It's not like houses. So you need to check what is the status. No, what is the condition of the rooms, that you're checking, condition of the room that you are going to rent, and the pro forma rent. Mr. Mac, what is pro forma rent? Why am I putting pro forma rent there?
Hello, I'm driving, but the hello, can you hear me?
Yes, I can hear you.
Yes, the pro forma rent is the price that it will be rented after, making some adjustment, that the price, the proposal, that according to the comparables in the area, that we can do modify.
Perfecto. Perfecto answer. Because many people, and I did a mistake in the past. That's why I'm trying to get you over this hump. It's like, oh, what is the rent today? Let me be conservative. Let me make sure I can pay the loan with the money I'm getting today, because I don't know if I'm going to get better money in the future. Well, if you do that, it's not even zero. You're going to buy minus zero. It's like if you expect to buy in today's market at actual rent and perform with a good cap rate, it will be close to impossible. So we are focusing on pro forma rent. We need to focus on the rent I'm going to get. And that's part, yes, of the experience of your group. It took me a while, even though I was a realtor for many years before, it took me a while to achieve that confidence that, yes, this is the price I'm going to get. That you only get it because you have experience. We have Rosanna with the management company. We have the other buildings we own, the other buildings we move in the squadron. So yes, the pro forma rent, I mean, and I tell you, a good friend of mine that owns many buildings, that's what he taught me one day. And the experience that we're passing on to you guys so you can buy faster. I was always very conservative because I was using my money, which I didn't have much capital at the beginning, and I was using other people's money. Then I had to be more careful because it was my friends, my family. So I need to be sure. So I was conservative. And they say, like, no, we're not conservative because our philosophy is we go in and we totally remodel to best standards. Not luxury, but to the best. So why would you think that somebody is going to pay in a brand new remodel unit less rent than the market? No, now we pay less. More in South Florida for the lease already. We talked yesterday to a board and things. At least for the next 10 years, we need housing, guys. We're fine. After 10 years, I don't know if Trump is going to be alive or not, or they're going to kill him again. But like, guys, after 10 years, we don't know what happened. For the next 10 years, there is not enough housing. The government is driving the same crazy how to get more housing here in South Florida. So we're fine. We're in the right business. So we have the income. Great. Now we go to the part that says work. Anybody has a question? Always stop me. The purchase price they're asking is $600,000. Do you like that figure? Ryan, do we pay 600?
Could you zoom into that area?
It depends on the numbers. You can't just say 600,000 and say, "Oh yeah, let's buy it."
It's already around. I'm going to zoom in the whole thing. Guys, I mean, there's no way something is worth $600,000. He rounded up. I mean, right away, I tell you, we're going to offer less. You cannot come up with a perfect price. Right. I said 1,050,000, 750, but 600? No, it can be. It can be a perfect number. But anyway, that was just me. Okay, these are part of the group that we've been talking, that we're negotiating with the buyer. There is something here, 787. Let's use David. You know this. David, is this a hard money loan?
What's up? Sorry, my mic was muted. Is that a hard money loan?
Yes, a 787. Is that a hard money loan?
It could be, but I don't.
Could be. If you get me that, I'm dealing with you.
I can't promise you. You got to really be good for that.
No, that's too low. I mean, guys,
Yeah,
that sounds better than a hard money. There's no way you get today's market price 787 hard money.
Right. Yeah. No, that is low. It's true. I mean, DSCR or whatever, but
Yes, this is a DCR loan because what happened, Ryan, remember, Ryan, you helping me here. These buildings are full occupied, I would say 80% remodel.
Yeah.
So that's why we can, we don't have much room into remodel, so we can go directly with the DCR loan.
Yeah.
That is a totally different model from the ones we do, but it's a very good model. You're going in with a very high interest rate, but you are fixed at least for 20 years. So if we are cash flowing now, hopefully we see, you're good. Let's go. So it's a DCR loan. This is important here. What is this, Mr. Ryan? How much money do we need?
20%.
Yeah.
$120,000.
DSCR loan is something different. No, you need 20% down. If you don't know what is a DCR loan, you're in the wrong room. But we'll talk that later. Insurance, 10,000 because we're going to get full insurance. Maintenance, very low. Property management, that's a bit too low. We don't do that at that price. I would accept no less than 8%. That for you, you always need to put property management. You cannot sell yourself low. If you're going to manage the property, still pay that to yourself. Because tomorrow, when you want to scale and hire a property management, you cannot do it. So you don't tie up yourself. Water, probably is only what they share. CapEx, this, property taxes, 2,000. This is the total of expenses you have per month. 60,000, very low repairs. That's J part, and it's very low because, as I say, these units are being full rented and semi-remodeled. Acquisition fee, that's what the group charge. That's depending how you buy this, is your commission, but that will be a commission any realtor will be getting, unless you're dealing directly with the owner. If we are dealing directly with the owner, our group will charge you 2% to get this property. Down payment, closing cost, always add closing cost. That's something, even when you do flips and that, you forget that you are going to buy, you need closing cost. So for this investment, Mr. Ryan, we lost Ryan. We need $144,000 and 204. We need 204. The construction money, yes, we can finance it all the time. So we're going to be able to finance it. But I want you to have this cushion. If something happened in the first year, something that you didn't foresee, if two tenants leave and you don't have money to pay the rent, guys, we've seen this so much. People that buying to the limit, and that's why we want you to buy right and make sure you can hold it for at least 3 years. So we need only 145,000 to buy this, 44. But we want you to have 204, have some emergency funds around, have some good credit cards, have some good business credit cards around to make sure you if you go into any financial situation that this is only a triplex, two tenants are not there, well, you need to come up with a mortgage payment. So now we go to the right side. And I'm going to use the pro forma, just only because there is less numbers. If I give you too many numbers, you get confused. Gross income, we have vacancy rate. That's important. I don't care how good you are, you're going to have some months empty. Not months, sometimes it's weeks. But yes, between moving one tenant to another, you have a week here, a week there, it will be a month. These are the expenses. This is one of the first flag. We don't have Ryan to compete, but yes, 35% is the percentage of expenses in the business. It's a standard in this multifamily business in South Florida and I don't know other states. If you are between 30 and 50% within this for the expenses, you're fine. I'm not saying you're the best, but less than around 30, you're very good. Around 50, make sure it's in good condition and you don't have extra expenses. But 35% is good. Why you want to be always between minimum 30 and 40? Because if you see this too low, you need to be very careful. That is really too low. Because usually if your expenses are too low, you know what happened? The owner doesn't want to sell. So it cannot be too good. If it's too good, you want to make sure that he forgot, oh, I forgot to put the electricity or the water or maintenance or the taxes or the insurance. The insurance, you need always to be savvy about the insurance because one thing is whatever the owner bought, one thing, whatever the new bank is going to require from you. And that can change a lot. A lot. Because if the owner had his own cash and he only will pay liability and some rental insurance, it will be paying only like 40% of the real insurance. This one was high, was 10,000, 12,000, so we're fine. This is the mortgage payments. Should be principal there. Cash flow, 754. Cash on cash return, 629. Anand, let's learn about each other. Is this good or bad?
Cash on cash of 6%.
629, yes.
I don't think that's good.
You don't think it's good? What I mean, but in a multifamily, remember in the cash you put in, you don't think it's good?
Well, I mean, considering like, if you're looking at like a risk-free rate around, I don't know, 8%.
I don't know. Give me. We're trying to chat here. I mean, so
yeah. So I guess I'm comparing it against, let's say, if you were to just buy a bond, right, a risk-free bond that gives you an annual return. Generally, the rates are, might be around there a little bit less. I would actually take a little bit less because it's risk-free, right?
Right.
So if I'm putting in risk and doing all of this work and waiting a year for all that, I would. The average they talk about is 8%, but I would, on like a cash on cash return, I would expect more than that.
Right. I will. I'm kind of agreeing. Anybody has any comments on this? On the 629? I mean, I myself, my personal opinion, and it's very personal. Okay, I'm not a guru in finances. I'm okay. What you're saying?
I say 10% cash on cash. If you can get 10% cash on cash.
No, it's 629.
Yeah, I know. I mean, it's too low. That's what I'm saying.
Yes.
The CD,
and I agree with you guys. Okay. But let's keep on thinking like an investor buyer. Okay. So I agree with you what you're saying. You're going to work for this. You're going to invest money and keep it at least for 15 months. So no, we need a bit more. Okay. But at least the cost of your money, you're not losing money.
Yeah.
Because I would say 5%, 4% is the inflation. So at least you're not losing the money.
Right. The flip side of the argument would be, you're not losing money. You own the asset. It's paying everything, and you're getting appreciation as well, plus some tax benefits from it.
Right,
so
right.
Like overall, an investment might make sense. Yeah.
Not get so advanced. Yeah, that's the part we're going. Then cap rate, and then we're missing Ryan. I know what happened. Ryan loves the numbers in the cap rate, although he's coming back. He's my best cap rate guy. Cap rate, guys, I love cap rate, but you need to play around, and you need to understand what you're trying, what information cap rate is giving you. Right now, at this point, it's just a number. But yes, like you guys were saying, I feel comfortable always with 8% and up. That cap rate is, again, it's not bad, 780. But for the amount, if it was a 100-unit building, yes, but we're talking about 3 units. That cap rate, again, is too tight, too tight. This is the part that makes short-term flipping investment good, bad, and this is the part that we live through, and is the part that will make the difference. Appreciation, 180, and this is when you go 180 and the 144 we invested, yes, you get this return. I didn't want somebody tell me IRR or not. If we go IRR, we go crazy. We're comparing only 1 year. So now we're talking about appreciation. If we sell, very conservative, only saying 10% on the building, and because of the construction and better management, we put 60, we double that, that's 120. So 180. That's only 5% appreciation on the building, less than that. So 180 in a fair market, if it's not going down, is a fair appreciation that you're going to get. This number comes from, is a very tricky number. You need to know what you're doing. It's a more important number, but it all depends on how much construction are you going to add. It all depends on how much I can raise the rents in the future. But this one, I mean, I shall show you how we did it, doubling the 60 investment, and we're now going to raise the rents to a new price, and that's what you get. You get an appreciation of 120 and 60, 5%. Well, no, it was at 10%, 600, 10%, 180. 189 because it's adding the payments on the principal, because remember, yeah, we have a DCR loan which has principal accumulation. So that's why we go to 189. And those, like Anand was saying, those are the numbers that they are behind the scenes. You're never, unless you understand what is going to happen, and doesn't happen always on the first year, usually happen after you have the DSCR loan. You're getting principal payment every month. That's pure profit. Very unliquid, but it's pure profit. Your tenants are paying your loan. That's the magic of multifamily or investing, or when you rent a house. Tuk-tuk, 825. Now we go back to the left side. Choose. Where did you take this number from? Let me go to work. We see here. Let me go work. 62. H53 minus B59. Okay. These are other part that, yes, you need to twist the numbers a bit. A 5% cap rate. Now we're going to income approach. Okay. 5%. Yes, it's in a good area in Hollywood. I still want to be more conservative. I'm going to go higher, 5.5. We're seeing banks doing 570 in very low areas like Alapata. So 5.5, you're very good as income approach. What we like to do sometimes when numbers are so tight, I add the income approach value, our comps value, we divide it in two. Two. And that will be an average sale price we can figure in to sell in 15 months. Not the income approach, because that's usually higher. I didn't like so low here, so I went there here. That, guys, is estimates. So now how do you choose one of the three values, either average or income or comps? You need to know what is going to happen in the market. We cannot today in a free, I mean, watching a Excel, if you don't know that market, you cannot it's not gamble, but predict with less risk as possible what is going to be the price for this property. If you think the income is steady and you know what the banks are looking to the income and how is the selling, if there's a high demand, 5.5, 525, that's very good. If you're thinking the materials is going to be too high and repairs, then 825 might be the one to take. I say, since we're thinking if we're going to move forward, let's go with the average. Between both will give us a good situation. Net profit is 77,000. If we buy and buy, hold it and sell it for 1 year. What do you think, guys, about don't get confused with this split. That's when we buy with partners and we split 50 and 50. That's why here it says the split here. Don't get confused with that.
I think for 1 year, that's great.
I like it too. But I don't know, sorry. This is the key, and it's very important. If you're going to be, we are going to be, that's why we're here, the investors, we need to know how to think and rethinking. Because if you say $77,000, I always do this at the end, guys. But this is why we were so successful, because we were not so conservative. If you talk to gurus in the market, those that they became millionaires or they lied to us that became millionaires, they're always going to say, what do you regret from your past? And they're going to say, I regret the many deals that I bought that didn't buy, or I regret the deals that I bought and I sold. They never regret of doing the business. So these are two important things that I cannot tell you what you're going to do. But yes, you're going to be so conservative like we are, and we're not going to do some deals that if the economy goes a bit steady, keeps going steady slowly, not crazy. We don't expect 40% appreciation, 30% appreciation, whatever happened during pandemic. No, don't expect that. But we cannot gamble we cannot be positive with that the economy is going to do so well. So we need to be happy, conservative people. But what we need to know is the numbers. So what I'm going to try that to get, although, I mean, I lost Ryan again. Ryan is too busy. Okay, this will be a net profit. Great. What other income I made that I'm not seeing here? Remember, there was cash flow. So I made $9,000 that year. That because I did this, that became part of my, it was 951. So you cannot say you did only 77,000. Your bank is going to have $9,000 more. This is cash flow.
Sorry, can you repeat that? What that's from?
That's from the cash flow, the extra, your income, your money after expenses.
Got it.
Then we have more. We have the I'm saying the principal. Although no, I'm being wrong here. Anyway, I'm going to put it like this. Principal. That, let me see if I have it in the work. That's why this formula is here, but we never show you this part. If we got Ryan here, I will, Mac, let me know if you know. What is this, Mac? What is all these numbers? Aishaya, what is these numbers?
Let me see.
They're not the lotto numbers.
This is that red.
No, this is one thing here. We don't gamble here, Mr. Aisha. We always say what we know, we don't know. That's the amortization table from your mortgage. That is a plus.
The amortization schedule for the mortgage?
Exactly. That's amortization schedule. Okay. These things talk to you. You should know what is going on. So yes, 1 year, first year, I accumulate what? Nothing. 350 per month. 1 year, $4,000. This should have accumulation, payment, interest. So yes, you accumulate the first year, $4,000. That's not bad, but it still is extra money that you're going to get in the principal that you don't see. Perform. Was I working the performer? Yeah. So principal is rounded up 4,000. And the tax benefits, I'm not going to go over them because you can depreciate the building, you can depreciate that. But I give you the tax benefits for you to overcome any broken things that break in the building, or to keep money to keep on maintaining the building. So with this, I'm fine. Where's my calculator? I don't know what my formulas are. So that's $90,000. Divided the 144 equal 90,000 divided your 144. That's a much, it's a nice return, 62%. We just need to go higher. We need to do $2 million. This is already small enough for somebody to buy it. One of you guys should buy it. It's not good enough to buy as a group and divide the money and this, because yeah, it's not bad to get the experience. But you're already cash flowing from day one. You only improve. And all you need to do to get these numbers better, wait and lower the interest rate. Meaning the good years, not the crazy years, but the good years, interest rate 6.5. And still we can negotiate a bit the price. Okay, I don't like the price of it. At least I'm going to go 585. I'm not paying 600,000. And let's say in 1 year we get 5.25. Now the numbers are going to be much nicer. Cash on cash 12%, cap rate only went 8%. I'd like to go more up, but didn't go more up. But now it's a bit nicer. 20,000 plus management, 6,000. I mean, the building will give you 24,000, $2,000 a month. Now, I take that. All you have to do is kill. I mean, if you are, that's why we say some families should buy one. All you have to do is the next 15 years, kill this loan, and you're going to get 3,000 plus $2,000, $5,000 at today's value money forever and ever. With some work. Plus depreciation. It's a entry level. We're doing this deal because remember we told you this person has about 8 to sell, and we're going to have to buy the 8 units to get a good deal. I mean, I don't believe you can go what they call in some markets cherry pick. If I go and say, no, I want this one, I don't want this one, I want this one, I don't want this one, it's going to become an issue. We're trying to negotiate all of them. Still will go a bit less. You guys, it's so important that you start doing it, because when we start this business in 6 years ago, we're buying 22 units, 22 duplex and we're buying the duplex at 280 in Alapata. And then we don't know what happened. It was an Arabic person. At the end, he walked out. He didn't sell it. We're buying like 4 groups. We're buying all them. I still cry for those duplex we didn't buy at 280, because they will be worth this 580 today. All you need is a good deal to establish yourself for the rest of your life.
Looks good.
Yes. Questions, suggestions?
How did you find this deal here?
Okay. If I tell you that, I have to kill you. No, I will not share our secret. No, it's. I mean, we don't use wholesaling tactics. Like, we don't go after mailing or that stuff. No, we pay wholesalers. But there's a group of guys here that we call them liquidators. And unfortunately, no, there is no one source. Once that I can tell you, if I knew one source, I might not tell it to you. But we know banks, we know hard money lenders that they need to sell because they got property backs. We know people like this guy that came through a hard money lender. He bought a large portfolio, not so large, but like he doesn't want the small deals. But again, in order for him to get the 30 unit buildings, he got to take the whole thing. So now this person is 76 years old. He said, I'm going to get rid of the triplex and the duplex and that. Let's do a deal. My only bad situation with this person is that he's an investor. So He's not selling to me to retail, but he's not giving away either. We're fighting. It's a tight situation with the money. We need to make sense, but that's where we are very strong with the group, because we know how to go alternative financing. That's something that you need to deal with. Owner finance, owner contribution, takeover payments. I mean, takeover payment or takeover loan. That's today. If you can do that, and this person got a loan for the last 5 years, I mean, you're looking at 4.5. So there is many things that you can make a deal happen. That's more important than the source. The source, all it tells for me, if the owner is not motivated to do a deal, we don't have a deal. I don't buy from commercial real estate companies that they sell me a retail value. We cannot compete with retail to make money. We need to buy better. We need to, and that's why you need to be in the market. I've been doing this business, not multifamily, but in the real estate business for more than 15 years. My partner is the same thing. So we know people. We know lawyers. We pay to lawyers. We know probate lawyers. Always there is a deal out there that makes sense. But no, I wish there was a easy way to tell you, hey, you can do this and this and this system, and you're going to get deals. In multifamily, it's not as easy as housing, residential. There is no sense. I get always called for our buildings. Do you want to buy? Do you want to sell? No, I don't. I mean, I want to buy, but you cannot sell to me because you're just a realtor calling me to get a listing, and I don't want to sell. But these guys, you might get an owner that need to sell. And that's yes, you need to look for them. But the situation is that in multifamily, compared to residential, you're talking about a 1% market. So how many owners you have to call? But you get to be well known in the area, and then some good realtors, they will call you with the pocket listed. I love realtors. I'm a realtor. But I love realtors because they're so in love with the commission that they don't see the business. I don't know the sentence in English like this. You don't see the forest. You don't see the trees. Guys, if you're selling this like every day, you should understand the business so you can make more money. But no, I'm happy. They're happy. They're working for the commission. They're not working for the business.
Question, Luis.
Yes.
How about the DSCR ratio? Would it meet the requirement from the lender?
Okay, in the calculator we have it. But let me go
You said
back.
1.1.
I put today 7.5.
No, the DSCR requirement from the lender.
Yeah, well,
you said we're not going to do hard money.
I tell you. I mean, I just talked yesterday to our lender because somebody asked me a question that I didn't have the 100% answer, and in fact, they have programs from 0.75 to 1.49 and up. So it really depends on the assets and your capability to show them how strong you are. Of course, they don't like to go to 0.75. That was like you're almost under the expenses. You have to have a reason for that. The average that right now they're going for is 1.1 to 1.25. This one, at the price we put is 1.8. It's very tight. I don't know, David, if you have any other advice that you can tell us. Do you?
Not really. I mean, like you're saying with the DSC, I mean, with the you know, the it's in my mind right now. Sorry.
Yeah.
The
More
point
than the
se-
1.8, 1.8, yeah.
yeah, the 0.75. I mean, we're looking at loans under, under one. I mean, but that's just the reality of things, how it is right now. I mean, to see a 1.1, 1.2 is, it's not like it was. So yeah, we're considering lower also. Yeah.
So that's your answer, Mike. If you're good enough talking to the lender, you can get you can get by with easily with this 1.1.
Yeah.
And I mean, I tell you, if you can go into this year, it changed so much. I mean, so much. I hate to pay interest. My only other tip that when you're buying for yourself, buy interest only. Why? Why would I say buy interest only this year interest only? Always is like 0.25 more, 0.50 more, but I love this year's interest only. Why?
Yeah, the rate is the lowest.
No, the rate is higher.
Yeah, the rate is higher,
Oh,
but
I
you
mean,
will
well,
have time.
what do you got?
You
But I mean,
will have
like
time to.
your payment, like there's no reason to like, pay down principal if you're looking to sell it.
Yeah, but that's another thing that we change minds on people. You always, I mean, buy and hold, buy and hold, buy and hold.
Oh, then I'm not too sure. I mean, like maybe
It's just it's a personal opinion. Okay, I can only say just because I heard that from Grant Cardone, and that's when I say like, hold on a second, why this guy is saying this? And what happened is simple. I mean, you are in control. You are in control of the payment because when you have a fixed loan, like will the bank love to tell me, if I have $10,000, I will not put it towards my building because I'm still paying the same thing. It doesn't affect my cash flow. But if I'm thinking already planning of, okay, I want to make so much cash flow by this year, so I have enough for what I want to do, now is when you say, well, I put money there, I'm making 7% or more money. I will, but you decrease your principal every time, so your payment goes down every time. You can control how much you're going to be paying. So that's why I like it, because then I'm in control.
wait, with the interest only, you can pay down. Yeah,
Principal is interest only, so they're going to evaluate again the interest next month. If you owe less, you pay less.
yeah.
It's straight interest. I mean, annual interest divided 12, but your principal went down.
I see. So if you can pay more down, then you can bring that down faster.
Guys, I'm going to show you something that maybe you don't know. You know what you don't know. One of those things I don't know. I know. Amortization schedule. Is your mortgage simple interest or, David? You have to answer that, and you might know. Is the mortgage interest simple interest or compound?
It's compound interest.
It's compounded.
Isa, is compound or is simple?
It's compounded.
I don't know. I'm gonna say I don't know.
That's my answer. Sirs, I mean, I would ask you the same thing about your credit cards, and you don't know. You don't know. It's not compound, sir. It's simple. I will tell you what the French system means, what the German system means. It's the same thing. Look at what happened here. This is the loan. They create a formula to pay in 30 years, so you're paying interest plus principal. Why your principal goes up? Because you're still paying the same amount, 3,000, but every month your principal goes down, so there is more portion of principal, less portion of interest. There's no compound interest here. This is a straightforward. 466 times whatever rate was divided by that. That's what I'm going to charge you. That's why if you want to affect here, you put 500, I mean 1,000, and you go $10,000. You go from here, you go to here. You just ate. I kill you with this one, no? You just ate 13 years of your mortgage if you put $10,000. And now all this money goes to principal, all this money goes to interest, so you accelerate the principal. We can talk another day about the math of the amortization schedule, more residential, but it's simple interest. They're lying to us. They're doing why the magic of the mortgage disappear, because you pay more principal every time, so you pay less interest and more principal, and that's how it disappears.
Yes, you're right.
That's the German system or French system. It is beautiful. The only bad part that the banks did that this is my money, this is my loan. If I buy a new house, why cannot take this loan when I'm here? I don't know, 10 years, 2 years after. How can I take this loan to the other one and apply the money like this? And the bank says, no, we want to make money again. So you every time you refinance or you buy a house, you go back to here. They make the money. I mean, if still you paying the same payment, you go back to here. Banks are beautiful guys. They're very, very smart. That's why we need to be smarter than them.
Louis, if you're paying more interest though, how does that work out? You're not, it's not going towards your principal, it's just going towards your interest.
Oh yeah, you're paying. You mean to take an interest only?
Yeah, if you're taking interest only.
Yeah, but then I apply money, and when I apply money, I say, look, all I can do is control my payment.
So
I didn't say you might pay a bit more interest, but I can control my cash flow now. I don't need to have cash flow in 20 years, and I can buy my Porsche and be
right.
I want to have cash flow now.
You rather pay a higher payment with interest than
right. If I'm thinking of I have extra cash, I'm not going to keep on getting high invest. I just want to be conservative and secure, and I want to know, I want to make, depending on the amount. I mean, I want to make that amount of money at that time of my life, so I can.
Yeah, you're tying up less money, right?
That's the. I mean, it was only as a control.
Yeah.
Question: if you are doing interest only, how that gonna affect the tax that you're gonna pay?
It doesn't, cash flow, because the taxes are always based on your interest, so it doesn't matter. For the bank, you can have if you're paying interest only, and this year you pay $12,000 of interest, or you pay regular mortgage and you pay $12,000 of interest, they're going to tax you the same. The bank doesn't care what you pay on principal; they charge you only interest.
So let's say you go based on your income, right? How much you made, the income. Let's say on your cash flow. So if you are paying only interest only, your cash flow is gonna be higher, or your income, no?
Yes.
And then, so based on your income, whatever income you made for the year, if you pay interest only, you know how that works. Yeah.
Yeah, no, but you're confusing two things.
Yeah,
you're right. You're right on the tax on the.
I'm not talking about the property tax or anything. I'm talking about as a business tax that you make money.
Yes,
it's a rental property.
Yeah, but if I make money when I'm too old in 15 years, why do I care to pay less taxes and have money in 15 years? Then my wife will be another guy.
Huh? No, every year. I'm talking about year 1, year 2.
Yeah, you're going to pay
your cash flow if you pay interest.
There is no way to avoid that. If I'm making more money, I'm going to pay more taxes. But I'm happy to make money and pay taxes. I'm not happy to pay taxes, but if I have to pay taxes because I make money, I'm happy.
I mean, you just made a choice. I don't think you made. What do you mean you make money? You made a choice not to pay interest, but the money that you make is gonna be the same
Tax.
regardless if it's
Yeah, but
interest only or with principal. That your income is fixed, but you choose not to pay the principal. And when you pay your taxes, is based on your net income, whatever you have. In which case, the principal is not gonna be taken down, right?
At that point, I will talk to my accountant. I will use depreciation from the building, so I don't have to pay taxes.
Okay, you use other values. Okay, yeah, I understand. Thank you.
But again, it's money now is worth for me more than money in 5 years, 10 years. That's the only reason I will do something like that.
Okay.
And also, even if you're going to sell it fast, I mean, you want cash flow to make sure you have enough money for the payments, enough money for the things. I mean, I don't like escrow with my payments, but they all lie always. I mean, commercially, you always have to have escrow. But my personal house, I never had escrow. I put the money to work towards principal. We're doing some classes. I'm going to invite you guys that I can show you how to make easily $1,000, $2,000 a year on your money, just moving it better. But not now because I'm going to confuse you. But because those are very simple basics money movements. We talked some of them with Anand yesterday. We'll show you. We're working on something to help you to make some extra $2,000, $3,000 here and there without zero risk. Just moving your money better or making sure some of you are doing the best you can with your money. That's what we're going to do. So guys, go out there,
Yes, sir.
find deals, find money, figure out what you want to do. Find deals, find money. Get your hands involved. You need to take action. Thank you for being here tonight, and let's keep going. Any information you need on these two deals, talk to me. I can send it to you. We'll probably need to sell at least 3 of them because we don't have enough money to buy them all together. So we're looking for capital to buy this ones. So talk to me and we can do it. We can plan, since there's so many, depending on the amount of money you want to put, we can plan by one, you keep it, one buy, we sell it together. We can do many things with this one. But talk to me fast. Even for the exercise of talking. I mean, that's very good. So guys, good night.
Thank you.
And talk to you as soon as you want. Good night.